Hey Jay, thank you so much for showing up and taking out the time for this.
Yeah, I really appreciate you having me. Excited to chat today.
Yeah, finally, I have so many ideas that I want to jump into, and you've seen me talking about this all over in the internet, mainly just LinkedIn. But I think I just want to get into this. You've been sharing your journey about summarize. Everything that you've been sharing is quite incredible, quite fascinating. Um, so why don't we start with your background? What have you been, working on? How's your career? I know that you're working a full-time job as a head of marketing. So why don't we start with some sort of a background and then we jump into, more summarized related talk.
Definitely. So my kind of wheelhouse, I guess, at this point is early stage marketing. So the way that I got my career started is I was basically the only marketing person, basically first marketing hire at like a 50-person startup that was primarily sales driven. So there was no marketing involved. And so I was tasked with building out marketing from the ground up. After that, I worked at another startup, a smaller startup that had 5 people. I was the head of growth over there, similar kind of situation. No marketing before. Over there, actually, the growth was pretty flatline. So I came in to kind of shake things up a little bit. We went from 6 customers to 400 in less than a year, which was really exciting. They actually, I think a couple months after I left, they ended up raising around as well, which was pretty exciting. And after that, I spent some time working and building on my own products. Now I'm working full time at Captivate Talent, which is a recruiting agency that helps startups, SaaS companies basically hire for revenue teams. So in sales, marketing, and customer success. And same kind of role, building out marketing from scratch, essentially. And then obviously, what we're going to be talking about a lot over here is SummarAIze, a product that I'm working on the side, basically as a startup. So yeah, my background is in early stage marketing, usually coming in as the first marketing person or where there's no marketing that exists before and building out like the structure over there and getting, most importantly, the revenue funnel like flowing. So getting that started, getting that turned on. So that way it's no longer just primarily like sales driven growth.
Awesome. Sounds good. So marketing is your jam. What aspects of marketing would you say you have the most like experience under your belt in?
Yeah. So originally, when I started my first role, I was more in the content space. So I guess still I do lean a lot on that, which is my content marketing background. And then over the years, I've also developed a little bit of more of a growth background in terms of a few different things over there, like making sure that any budget's allocated correctly and we're making sure that, dollars in are returning
Mhm.
dollars out in multiples and focusing on that a little bit, just figuring out where to allocate budget and those kinds of things. And then also just getting really creative on how to spend dollars. So I've tried a lot of different things. I've done like influencer creator marketing before. I've also spent money on kind of like low risk like VAs, like building out processes, obviously like working on stuff with AI now, which is a really popular space in marketing. But basically all around this theme is kind of what I do for growth is all around this theme of I want to invest the lowest number of dollars I can and maximize and generate the highest amount of ROI. So, kind of creating efficient growth is what I call it, not necessarily, hey, someone that's just going to come in and say that they're doing growth and spend a lot of money and maybe you're getting like a one-to-one return or something like that. That's not necessarily what I like to do. So those are the skills that I've sharpened up. I'm not the best in like paid marketing, or I've done a little bit of email marketing and those kinds of things as well. Paid's a little bit something that's not in my wheelhouse. But yeah, that's kind of where I kind of got my start and what I kind of do on the marketing side now.
Awesome. Cool. So let's talk about Summarize. You're building the SaaS tool. It's growing slowly and it's growing really well. It's definitely attracting a lot of eyeballs on LinkedIn for sure. What is Summarize? How would you describe it? What's the background story for about this particular tool?
Yeah, so SummarAIze is a product basically built for creators or marketers. What we do is we take your podcasts and video content, so like webinars or like interviews as well, and repurpose that into other text content. So think about taking your podcast and turning it into getting out LinkedIn posts from it, or Twitter threads, or a blog out of there, or even an email to send to your subscribers or things like that. We even provide like summaries, timestamps. We pull out quotes for you, title suggestions, keywords. If you're uploading to like YouTube or something to that, we even do like the YouTube description, a lot of that stuff. So basically taking your podcast, your video content, and getting the most juice out of it with AI without necessarily having to do like as much manual content repurposing.
Right, right, right. So it means it's an AI powered content marketing, content repurposing tool. If I were to describe it in a single term, would that be fair?
Exactly. Yes, exactly.
Okay, sounds good. Um, so I've noticed that you started this tool, this product around January 2023. Is that the time when you were like you started building it, or you had this idea before that time? Because I'm just asking because in December, I think close to December, November, I think ChatGPT got released. So does it have anything to do with ChatGPT in terms of ideation and how you thought about this tool in the first place?
Yeah, so in terms of like the timeline and how that got started, so I've actually hosted a podcast before. I used to host it at that company where I did like 6 to 400 customers in less than a year. That was a big part of our marketing strategy, actually, was having a podcast. And we grew it basically from, well, I was the one that was working on it. We grew it from zero to over 100K downloads. We were in the top 2% globally. I was working on all this stuff. This was like way pre ChatGPT, pre anything, where all the content repurposing was done by hand. And it was we had a lot of success with it, but it became one of those things that it was really fun at the beginning when it was brand new, and it was really exciting to work on. And then eventually it became my least favorite task to do and work on. And then I've also done some consulting, like, and some post-production work for other podcasts as well, doing kind of the same thing, taking that long form piece of content, chopping it up, creating other pieces around it, all manually. And so around November, when I was like working on one of these projects, I was thinking to myself, I was like, there's got to be like an easier way with this. There's been a lot of development like in AI. This was actually before ChatGPT was even like launched like very publicly. And
Right,
so I
right.
just kind of got to thinking about it a little bit. And then in obviously like ChatGPT came out, I was still thinking about it. And then actually the week between Christmas and New Year's, I spent the whole week. We get it off for Captivate Talent. Actually, it's one of our work benefits. And so I spent that whole week basically building out version one, version zero, essentially, of SummarAIze from scratch, and kind of just hacking it together with the tools that I kind of knew. And so that's kind of how it got started. So it got built in a week, and then I launched it out publicly at the beginning of January, basically, a little bit after. I think it was like a few days after the new year had started.
Right, right, right. So it sounds like you had the idea, it clicked, it looked like you're solving a problem that you're facing by yourself, and you just like went into it, like built the product, the first version, made it live, put it out there. You didn't like first go into like what should the MVP be, and like let's talk to a couple of users, like that whole thing.
Yeah, the idea was that I'm going to solve for one specific use case, the use case that I was doing. So we started out with show notes. That was the first, like, basically feature set that we had. So we basically like give you like a little bit of a summary. We'd give you a list of like bulleted highlights from the episode. And then we'd also give you like timestamps and then summaries for each of those sections of the episode, along with like a quote. That was like the first version. And so my thinking there was like, I want to solve just one specific use case, and I don't want to have to invest as much either. So my initial investment, like money that I spent, like testing this thing out and like getting it built, like I actually was the one that built it all. And I spent about like maybe like a couple $100 at the most. That was like my investment. And like I said, it was built in a week. I came up with the idea maybe like, a week before I built it. And then the building time was like spending that week, like about like 6, 7 days, like I said, between Christmas and New Year's, to kind of get it started. My first product that I worked on before this actually called Swipely, and I'm sure I know you had asked about it in kind of our conversation there, like on LinkedIn DMs and stuff like that. But that was a product that was my first like foray into like startups, and the way that I did that is I spent a lot of money to build an MVP and stuff like that before like monetizing. And so this time, knowing that I was going to be bootstrapping it myself, something that was really important to me was I've got to be close to being profitable, like almost on day one over here. Cause, it's a lot, first of all, it's a lot less fun, and it makes it a lot more stressful to be trying to like win your dollars back essentially that you invest. And so that's why I wanted to keep it minimum spend, minimum investment on my end, and then be able to generate revenue. So that way, the product is basically paying for itself, and I don't have to worry about spending my money into it anymore or anything like that.
Right. Sounds good. What was the point when you thought this idea is something serious? Like, what was the point when you thought, we can this can be validated? Were there any specific things that you noticed? Any pattern in social media platforms? Anything in general? Conversations that you had with other people that made you think, okay, so this is something serious. This can actually be useful to people.
Yeah, I think it was just my own experience, and I guess multiple versions of my experience, right? I said that I started a podcast back at a previous company, and then I had done some consulting for post-production and stuff like that. And then I'm sure anyone that's in the LinkedIn space, that is in marketing, that's on LinkedIn and stuff like that, probably sees a lot of topics around like content repurposing, maximizing, your content efforts and stuff like that. So those were kind of some of the signals that I saw that felt like this could be a really good winner. It was just a matter of kind of putting out a product out there.
Right. So, talking about building an MVP, um, a lot of folks typically start with thinking of the first version of the product that they want to put out. Is there any tip that you would share here, specifically knowing that you built it in 1 week and then you like put it out? Is there any set of tips that you would share, building an MVP for the first time?
Yeah, I think a few different tips. Actually, I'll start with one that starts from depending on what your personal skill set is. So, I always encourage people like to try and figure out, if you're not like a technical person, if you don't have a technical background, figure out how you can build your product without necessarily having like a technical resource or anything like that. You can absolutely do that and go find out a co-founder, but that's going to be usually, unless it's someone that it's going to be really hard to kind of get them to convince them to be on board. So if you're not a technical person, look at no code tools. There's a lot of no code tools that you can put together to kind of build your first version of your product. So that would be my first tip over there. And then my second tip would be to, whatever you think of your product idea is, take that down and see if you can scale it down. Usually, and it happened for me too, the first time I built my product, you usually have this like kind of like grand vision that comes into your mind of like, oh, this is what I want the product to look like, and it's going to do this and it's going to do that. And, you have all these like bells and whistles on it. And so what I always say is, if you're going to be building it yourself, and unless you have that like network where you can raise money or stuff like that, if you don't have that, that exists, and you're going to have to be bootstrapping this project and you're going to have to develop it on your own and put it all together, try and see if you can make that feature set a little bit smaller, like really focus in on what's that one core feature that can work for everyone. And then you can always stack features on top of each other. So that would be like my suggestion over there. I know we might talk about this later on, but one thing I'll say too, on like the bootstrapping side, if you decide that you are going to bootstrap, and for a few different reasons, maybe you don't have the network to raise money, or maybe you don't have enough experience, like proven experience that you can do this yourself to be able to raise money, and you are going to bootstrap it. Like I said, it's really important for you to kind of minimize your risk over there. It's really easy for people to overinvest because they think like, oh, this is definitely going to work. It's definitely going to be sustainable, and it's going to go to market, and, I'm going to be able to generate revenue off of this. It's very easy to kind of like trick yourself into thinking that. So, I would always say like, try and minimize your risk as much as you can, and then also go to market as quick as you can, because the market will tell you whether or not this is a good idea.
Sounds good. Another question that I have about building an MVP is, do you think one should be thinking of things like what is the total addressable market and those kind of things at the stage of building the first version of a product, or those conversations are for later stages?
I think you should have some sort of conversation on that, but I think the better way to actually have that conversation is to reframe it around your goals. Like, what are your personal goals that you want to reach? Like, are you looking to build something that makes you like $100,000 a year? Are you looking to make something that makes you $1 million a year? Are you looking to make something that makes you like 10, 100, be like become like a unicorn status or something like that? So kind of think through and analyze like what your personal goals in that sense are, and then kind of decide whether or not like how much time you need to invest on looking into the market. You should definitely have an idea, but I like to kind of break it down a little bit differently as well. As I like to look at, hey, I have this product idea. Okay, what do I think I could, if I'm facing this problem, I could probably do a realistic kind of guess on what the pricing should be, maybe on what I'd pay for this, because maybe I'm hacking this together right now with a few different tools or something like that. So I can come up with like a little bit of a price estimate. And then I kind of work backwards as well based on my personal goals. So like, for instance, if I said I want to do like a product that does $100,000 a year, and I'm going to charge $20 a month for it or something like that, that means I need to get 5,000 customers basically
Right.
on that, right? Or like, yeah, like if they're paying like annual like $20 a year or whatever that is,
Right.
obviously it's like less on a monthly basis and stuff like that. But yeah, that's kind of how I would look at it a little bit. So you can do some research and make sure that there is enough market, but it can be like pretty like, it doesn't have to be like as in depth. Like it can be like, okay, do I feel like based on this thing? And you can look at other competitors as like not even necessarily competitors, but other products in this same space that maybe sell to the same type of persona. For instance, like if you're
Right.
building like something like for SEO, like, you might say like, oh, Ahrefs has like this many like customers over here. I'm building a product that targets that similar market. I could definitely, like, if my personal goal is like based on this, like I can definitely make that math work out, like, and kind of go after a similar market. So that's kind of how I think about the addressable market. And obviously, like if you are raising money, then you are going to have to do a little bit more research and provide a lot more evidence around it. But that's how I would kind of look at it.
Right. And then when it comes to like the capabilities of your product at the MVP stage again, right? You're building the MVP, you have a rough idea of what you want to build and why you want to build it. Would you say that is again a good time to think like the way I think, and again, like me being a noob in, product building and building startups, I have no experience at all. So I'm just thinking for anyone who's listening, um, and they're excited about starting a new product, they're at the MVP stage. Would you say this is the time to think, do you have a differentiated value to offer, or am I just building another SEO tool to compete with Ahrefs? So what would you say is the right stage to think of that unique value that your product can offer, if it can?
I think you should think about that earlier on. But again, like that conversation needs to be framed around what your personal goals are. Like, for instance, like if we're talking about like SEO tools, there's a
Mhm.
lot that are out there, right? Like you don't necessarily, if your goal is to make something that gets you $100,000 a year, just so that way you can work for yourself or something like that, like
Mhm.
you don't necessarily need to reinvent the wheel. You could be making a product with maybe just a minor like different feature set or something like that, and targeting, or maybe going after like a specific like niche or something. Like maybe, hey, I'm not just targeting people that have websites like an Ahrefs. Maybe I'm targeting people that do like automobile websites, right? SEO
Right,
tool just for
right,
automobile or something like that. So that's kind of how I would think about that. Like I think it is an important part of it. Like you do need to decide like what that feature set is, what market you're going to be able to serve,
right.
but it doesn't have to be as like complex. Like I encourage people a lot more to just like hit the go button. It's really easy. Like I said, like as easy as it is to overinvest on an idea in terms of dollars, it's also easy to overinvest on an idea in terms of like the time that you spend into it and think like, oh, like, I need to have this business plan like formalized and write down who my target audience is and make like a list or like put together all these different things. Like I would just say like, hey, if you like have this experience or if you don't, like go find people that have those kinds of similar experiences that you're looking to like sell to, ask them questions, figure out, and then just start building. Like the best way to continue to keep making progress, like if you want to build something of your own, put something into the market and start getting feedback on it, because that will help you keep going even faster and faster and figure out like what kind of markets are interested in the product that you're offering or what you can do if you really want to solve for that market and all of those things versus spending too much time in the weeds like figuring some of that stuff out.
Right. So the first tip that you gave about building an MVP and starting early was about the co-founder, right? And you mentioned how it's important to think of that decision and what is the right time to bring in a co-founder. And you mentioned, for example, let me know if I'm getting this right, but you mentioned if you can build it on your own, then just do it because it's hard to find a really good, well-aligned co-founder typically, right? So, but you have recently brought in a co-founder in your product, which is very interesting. So, can you talk about how you made that decision?
Yeah, there was a few things that kind of led me to the decision of whether or not I should bring in a co-founder. A few things, and I can kind of peel back the layers on that. One, so the original version that I had set up for SummarAIze was like basically built on like no code. And so there were some like technical limitations in the sense of, I could probably break through some of those technical limitations by spending time learning a little bit more and trying to figure out workarounds and stuff like that. So that was an external factor. And then another external factor was there's also a few other competitors that had popped up since I had launched my product. And they were all around the same stage. We still are all around the same stage. And so that kind of made me think like, obviously we're really early. There is a lot of market share up for grabs. And I have a chance of like the way that and I saw this, I think someone else shared this analogy on Twitter. It's not my analogy, but like it was this idea of, do you want to have 100% of a grape or like 25% of a watermelon is kind of what I think about it as. And so because everyone was trying to acquire like market share and things like that, I could definitely continue to keep building also and, sharpen my no code skills and keep building as well. But if I wanted to go faster and make sure I gained enough market share to kind of be able to have a place in the market, I needed to bring in a technical co-founder that could maybe take some of that burden off and do some of those things a little bit like, when you're using an actual code base, it's a little bit faster to move on some of these things. You're not as limited. So that was kind of the reasoning behind it. But I did come to my co-founder, or my current co-founder right now, with kind of proof of traction as well. So, I had 5 paying customers. There was MRR that existed over there. There was validation. There was users signing up, all of those things. The MRR, I think, was really helpful as well, like just showing that people are willing to buy this, even when the product doesn't necessarily look that great. So it kind of shows like, obviously, this is a really, really big pain where like you don't want something that you're willing to get it, because even though it's not like buttoned up or anything like that, it's just such a powerful pain where you kind of want to pay for that. So that was kind of my thinking over there. So if you're deciding on whether or not to get a co-founder, like I think the things that you have to consider are, like I said earlier, what are your personal goals? What revenue goal are you trying to attain? Maybe if I had said, hey, I just want to have something that does like $10,000 a year or something like that, I could have probably spent time and figured it out and taken my time to do it on my own. But, I want to have something a little bit bigger than that. And then the other thing, like I said, you've got to look at the external market. If you're coming into a market that already has some players that are established and you're trying to break from that a little bit and maybe show a different point of view, then maybe you can hold off for a little bit longer on the co-founder. But if you're coming into a market where, everyone's just clawing to get the market share, it's like basically like the gold rush. Like it's all up for grabs and someone's going to grab that stuff. So, in those kinds of situations, you might want to consider a co-founder. And yeah, those are the things that I would look at when considering whether or not a co-founder kind of makes sense.
And what about any kind of traits in the person that you're considering, being a co-founder? Is there anything that you looked for specifically, or would you advise anyone? Because I see a lot of people, saying, we do, we're both buddies. Let's just start something together, and we're both gonna be co-founders. Are there specific kind of, you know, technical skill sets or other things, maybe in terms of character traits, anything in general that you would say one should look for?
I think the biggest thing is probably alignment on goals. So like we've talked a lot. I've talked a lot about personal goals and those kinds of things. You've also got to make sure those personal goals are aligned with the same person. So, for instance, if you want to build this gigantic product and go out and raise money and like all of that stuff, is that something that that person is interested in, or are they just interested in something else? Like, kind of make sure that you have that same alignment on like what the end goal for the business is. I think that's really important. And then obviously you have to be able to kind of mesh personality wise a little bit as well. So definitely, you want to talk through it, maybe do like a trial run. Like some people have done that. I know, like maybe you say like, hey, like we'll commit to this for like 1 month, we'll trial it out. At the end of the month, let's decide, or 2 months or whatever you want to do. Let's decide, do we like working together? Are we both aligned on the way that the product is heading? All of that. And if that's not the case, like we can separate ways and no harm, no foul or anything like that. So those are really helpful as well. But yeah, I think it comes down to having those conversations and having that alignment over there. For me and my co-founder, like we're both aligned on wanting to be able to build a business to where we won't necessarily have to we'll be able to free up a lot of our time in the future. Like either we decide to exit the business at a really high like valuation, like really nice sell point, or we create a business that runs so effortlessly where we're not necessarily needing to be involved, and we can take profits on this like every single year and stuff like that, and it takes care of our lifestyle and those kinds of things. So that's kind of our goal right now for this business. And so just making sure that you have that alignment, I think, is really important for building a successful business.
And you mentioned how early stage traction really helped you find the co-founder, because of course if you have traction, you have real paying users, especially, then that's always a good thing, right? So I'm wondering, how did you figure out that super early stage growth? How were you able to sell to these initial paying customers? I think Flying Cat was one of them, right? If I'm not wrong. Um, Mila, who's the marketing manager at Flying Cat, she tried SummarAIze, I think, and she really loved it. How did you figure out that super early stage customers, and like acquired them when you I assume you haven't done a lot of paid ads and those kind of things, but what has your strategy been?
Yeah, the strategy for that, if you're going to be bootstrapping, is you need to go out and talk to people. So I got my first customers through LinkedIn DMs, basically saying, "Hey, I built this product. I'd love to get your feedback, honestly." Like, for me, it was a tool that was built originally just for podcasts, and so I'd reach out to people in my network that had a podcast and be like, "Hey, I just built this. I'd love to get your feedback. You want to give it a try and let me know like how it works for you and stuff like that, whether or not it works." A lot of those people ended up converting back to being paying customers later on. And I built like a strong relationship with those people. So that's really how that kind of got started. Is those kinds of things, like building those relationships and just kind of getting using grit, honestly, and getting into DMs. And I would say if you don't have like necessarily the network for that or people that could be your customers, you can still execute the same kind of strategy. It might just take you a little bit longer to get the results that you want. But what I would say is like for your first 100 or so customers, just get in front of people, like talk to people in DMs, make sure if you're getting people to sign up, like talk about what you're building, share what you're building. If you're getting people to sign up, if you're getting people to pay that maybe you didn't necessarily know before, ask them what they're liking about the product, get to know them a little bit better, build that stronger customer relationship. That's really what's going to power you through the beginning. It's really easy. I think a few places where people get stuck on products is in a few different places. One is kind of at the idea to MVP stage where you get stuck and you're like, hey, I have this great idea, but I don't know how to build this, or this needs to be perfect, that needs to be perfect. And we kind of talked about this a little bit earlier, right? So you get stuck and you never end up actually building the first version of your product. And then the other place where people get really stuck too is MVP to first few customers. And it's like, hey, I built this awesome product. I actually did it. I put it together and I released it out, and it's like crickets. Like, I didn't hear about anything. And so I'm just going to kind of give up. And you have to ask yourself, like, have I done enough to be able to give this a fighting chance? Like, have I gone out and talked to people that could be my customer, given them a chance to try this out, get their feedback, all of those things? If you haven't done that, you haven't really given the project enough justice. So that's what I would say. Like, if you want to acquire your first few customers, go through your network, go through potential customers that could be good fits, like just message people, have conversations, create those relationships. It's hard work, but there's no substitute for it.
And I assume the idea here is to get as many people as possible to use your product. And once they're into using your product, if they find value, they're going to convert it into a paying customer one, right?
Exactly. Yeah. So most users, the case is everyone's got an opinion. So everyone wants to give you feedback and things like that. Not everyone's going to convert into a paying customer. But like I said earlier in this conversation, that the market is really going to tell you whether or not a product is worth it or not. If you get a bunch of people to sign up and they don't end up buying the product, something is wrong with that equation of the value of the product and the pricing. So the value balance is not centered, and so that's why you're having that issue. And sometimes there will be cases where, even at $0, people aren't necessarily interested in the idea. So it kind of just depends, but the market does a pretty good indicator. As long as you're giving your best foot forward to get in front of people that could be your customer, and you're not getting conversions or anything like that, like I said, the market's a good indicator of, whether or not this is a viable product.
Yeah, sounds good. Would you say SummarAIze itself has figured out product market fit yet?
I wouldn't say we figured it out yet. We do a really good job of converting the existing user base that we've had, and we're growing slowly. But we haven't necessarily figured out everything over there in terms of product market fit. We have good revenue. We're above now 10K ARR, which is an awesome milestone to hit on. And I wouldn't say we're close there, like maybe later down the line, but we're constantly we're still getting a lot of feedback. We're still trying to implement that. And I would actually say, this idea of product market fit is really interesting to an extent. Like, as a founder, I would say that my goal, if I'm doing my job correctly and we're working on the right things, like, we should have some sense of product market fit, but not necessarily like something that just like, I don't want to ever, because I feel like product market fit, like having that sometimes pushes you into a little bit of complacency where you're like, I don't want to improve the product or add new features or things like that and grow that feature set, or change things and move things around. So, that's something that, I want to continue to always keep working through product market fit, even as our revenue kind of grows.
And then how do you define product market fit for SummarAIze? Do you have like a specific goal or point to reach that you would say, finally, we're there?
I think for me, it would probably be looking more at kind of the qualitative signals and even like conversion, like just seeing that bump in conversion rates continue to keep rising. Like, that's what I would be looking for to see whether or not we're doing a good job of providing enough value. And so that's something that's there. And, just that qualitative feedback, we do have a lot of users that tell us, like, a lot of paying customers that tell us, like, hey, like, I'm so grateful that your product exists because, like, I used to spend like hours doing this before and now I don't spend that much time. And it's amazing. It's such a great like time saving tool and all of these different things. And so, there are some senses of like product market fit over there. I don't think there's anything. It's kind of like a feeling is what I know. There's like Superhuman does like a survey and stuff like that. Maybe that's something we'll explore at some point as well, like doing some sort of survey of like, if you didn't have the product, how would you feel about it? But for me, it's also just like all these qualitative signals where you hear back and people get really excited, whether it's like we launched a new feature or something like that, and everyone's like, hey, I love this feature. Like, I used it and it is amazing. Like it's awesome and all of those things. So that's kind of what I look at as well too.
It makes a lot of sense. I think that's totally true. A lot of companies just are obsessed with numbers, perhaps. So the fact that you're looking for more qualitative feedback says a lot. Um, do you? So I'm just thinking, in terms of um, pricing strategy. When it comes to pricing your SaaS, do you have any kind of tips? Is there a specific framework process to be used? Because I'm also trying to work on something, and this is in fact attached to one query that I also had for this thing that I'm also working on. And I was like, should I be looking at competitors, like figure out, okay, so they're charging this much, but I'm also offering this extra thing. Should I be like, they're charging $20, mine should be $30? Like, is there a process to figure that out, or is it more about like intuition?
Yeah, I look at it in a couple different ways. It is a little intuition, but it's also, I do kind of look at what else is in the space. So if you're bringing in a product where there's no existing competitors and you're bringing something absolutely brand new to the space, I would look at other products that people that you're selling to might be interested in buying. So for instance, if I was building like a AI content writing tool from the beginning, like before
Yeah,
there's
that's
any other, obviously there's millions of them now. But
yeah,
if I was looking at something like that and nothing like that existed, I'd probably look at like other SEO tools, like other content related tools, and see what their pricing is. And that kind of shows like price sensitivity, like how much people are willing to pay. So that's if
yeah,
there's no competitors. If there are some competitors, you definitely want to look at what competitor pricing is and kind of get an understanding as well of like what they're charging for, what is the reasons behind their charge. And then the third thing as well is you always want to look at your own margins. And so this kind of goes hand in hand a little bit with that competitor pricing or other people's price. If there's no competitors, like other pricing and things like that, is I'm always looking at what is my cost to be able to do this. So like even in SaaS, like there's always a cost still associated with running this. Like maybe you've got to pay for hosting, right? Maybe you have an API or some sort of like other thing that's like stacked on top or something else, or you're using some external systems, right? Like for instance, like even like logins and stuff like that. Like, some people use like is it Auth or OAuth or Auth? Yeah, I think is the one by Okta. Like that's a cost. Like they charge you for like logins and stuff like that. So some of those things that you might be like being charged like on like a per user basis or things like that, or even if you're using Stripe to bill, right, you're getting charged 2.9% plus 30 cents. So like those are all your cost of providing that software service. So you should also be taking a look at that and trying to figure out like what your margin needs to be, and then look at that in terms of your pricing strategy. So that's what I would look at over there. And then also like figure it out. Like, so, for instance, like in our competitive set, some of our competitors, I would say actually are like cheaper in terms of cost per minute, but we do a few different things different. Like we've focused a lot on the quality of our content output, which we've gotten a lot of compliments on, and, how we kind of take that content and chop it up. Some of our other competitors are a little bit more DIY, where like, you have like the bones of things, but you still need to do work within the platform to get the stuff done. So that's why, and ours is more of like, hey, it's done for you. Like this is like pretty much like publish ready. So those are some other things that I'm thinking about pricing, like in terms of like how much work does the user have to do after they do whatever they want to do. So those are the things that I look at on the pricing side as well.
right. So it sounds like what you need to do, like at the bottom of it, it's just a ratio of basically an analysis of the ratio of capabilities and cost of a product. So what can my product do, and what are the rest of the competitors doing or capable of doing, and what are they charging versus what can I charge, right? So like a capability slash cost.
Yeah, and yeah, the cost of you actually doing this, because like, Software is never, it's not free to host. Like you've got to pay money for that. There's storage for that. You know, if you're doing like anything with like media, there's going to be increased storage for that. Like I said, if you're using anything that you're building on top of like even like Stripe or like a paddle or something like that, like you're going to be paying out like a percentage of your sales for some of that stuff.
Right.
Or even other things like that that might scale as the product goes. Like it might be like variable costs. So those are things that you just need to like consider when going into your pricing, and providing enough like margin as well. So like one thing I do as well, and we look at super closely, is like how we're like the cost of each user. So like if you're doing like this is like really important, if you're doing like a trial thing, you want to look at first of all, like I said, connect back to your personal goals. When are you looking to hit these goals, like revenue goals, profit goals, all of that stuff? That's gonna change your risk tolerance and things like that. And then you want to like consider as well, like on the pricing side, like what is the pricing margin going to do? Because like for instance, like if you don't choose the right margin, like let's say I choose like I'll give you an example. Let's say it costs me $2 per user, right? Every time my customer uses my product or something like that, I'm just making up numbers. It costs me like $2 per user, and I charge a $6 a month plan, right? So 3x basically my cost. So my margin's like 67%, right?
Yeah.
Now, if I have a trial that's going on, and let's say each of those trials cost $2 or something like that. So now basically what happens is each of my paid users can support 2 trials, and that makes me break even, or I can support 1 trial and get out a 33% profit, right? So that's
Right.
something you need to consider as well when figuring out the pricing strategy, because like if you do like a trial or something like that, and you're not just doing like everyone that's on there needs to be like paying, that's something you're going to have to consider, because basically what's going to happen at some point is your your paid users are essentially covering the costs for some of your trial users. So you need to look at that with your margins as well.
Right, right. That's pretty interesting. Okay, so if you go back to your previous company, right, the previous product that you built before SummarAIze, I know that you mentioned in another podcast and interview how it failed to drive revenue, right? You were still able to attract a lot of free users, but it never made it to actual revenue. What are some of the things that you think were wrong in that scenario? What was the actual, what were maybe a couple of reasons perhaps that were blocking the revenue from happening?
I think the biggest mistake I made was not monetizing early. I think that was it. That was really what it comes down to, is like sometimes there's this fear of like, if I monetize a product, I'm going to lose a bunch of signups. But the reality of the fact is like, if you don't monetize, like $0, like you, if like $0 from 1,000 users is still $0. Like I would rather have 10
Mm,
users paying me money, or like even 5 users paying me money, than having like 10,000 users and generating $0. Now that's going to depend. If you're working on something that's going to be like, hey, I'm going to go out and raise money and all that stuff, you have a little bit more risk tolerance for allowing free users, and you can monetize later. But even then, I always say like you should monetize as early, because like, first of all, free users behave very differently than paid users. That was a big lesson over there. And yeah, that was the reason why it didn't work, is because I didn't monetize early enough, and that would have made me make a lot more decisions about like what to do and what are people willing to pay for over everything else.
you mentioned free users behave differently than paid users. Tell me more about that.
Yeah, so free users behave a lot differently than paid users. They are A lot of free users can be like kind of like freeloaders to an extent, where they're never gonna upgrade. It doesn't matter like how good the product is or anything like that. Maybe they don't have the budget for it. Maybe they're like not they're not the person that's the buyer, like that they're going to be the one to be able to sign off. maybe they'd have to spend their own money on it, and that's why they're not doing that. But like they're like a lot of those free users, like for one reason or the other, like will not become paying customers, mostly not because of anything that's wrong with your product necessarily. It's just that, you know, they're going to behave a lot differently, like in the sense of like, you know, a lot of the free users I've seen from a lot of different products, they also tend to have like the most support. Like you have to do like the most support. First of all, there's a cost associated with them using the service. And then, you know, they're the ones that usually have the most complaints and service requests and things like that. And they're not providing any revenue, but yeah, they just behave a lot differently. And, you know, like I said, a lot of those free users will never convert into paying customers. And so that's why it's important to monetize early.
Right. I think now that you've mentioned this, I can definitely see me being being one of those users for a couple of products for sure. There are a couple of, small products that I use on a daily basis, and I don't like keep a good track of it, but I haven't ever considered becoming a paying customer. Although there are really good reasons to be. So yeah, I think that makes total sense. Have you thought about, would would this make sense for anyone who's building a new product to associate the number of free users they're able to attract to their product as a sign of validation of some sort, or would you say that is a failing strategy?
I would say for the most part that is a failing strategy, because like I said, first of all, there's no guarantee those people are ever going to upgrade and find enough value. And even if they do upgrade, maybe you don't hit as well on a conversion rate as well. So like maybe you get like 10,000 users that are free, but only 10 of them are willing to pay. And so what that means at this point is basically you have to pay for the other 9,990 users. So there's a cost associated with that. And so, you know, if you're using your own money, especially, you're doing a bootstrap approach, that can be very dangerous because you'll end up over investing. And then you kind of got to figure out like, what am I going to do? Am I just going to eat this cost, or am I going to shut down the service for free users? A lot of that stuff. So yeah, I would say monetize as early as possible, just because, like I said, like at the end of the day, businesses need money to be able to work. It doesn't matter if you have millions and millions of dollars in the bank. Also, those companies, investors want to get their money back. And, you know, the only way that you can get your money back is by actually earning money. And so that's just the reality of the situation. So I always say to monetize early.
Right. And would you say, like, when thinking of new ideas, do you use this filter of, whether people would actually pay for something like this or not? Or would you say, like, what is your thought process of validating any idea to say this is something that I want to pursue?
Yeah, I think you know, that's a tough one to answer. You kind of have to have a little bit of intuition on that, like whether you think multiple people will face this problem, and then you have to put something out and kind of just see if it sticks, honestly, to an extent. And that's why I say like shorten that time to from idea to product. Shorten that as much as you can, because like the reality of the situation is like you can overinvest on some of that stuff, and you really just need you'll never truly know like what ideas will work in the market. I mean, I come across like I'm a big like product person, like product nerd, in the sense of like I like to find new interesting products, and there are so many products I come across that, you know, make good revenue, and like I'm like, first of all, like how did I not think of that? And like, or like, I'm surprised that this is making revenue. And so it kind of just like, you never know until you actually put it out. Not everyone's going to work, but you've got to try.
Sounds good. And like for the future growth of SummarAIze, it sounds like you've built it from, zero to one perhaps as of now. What are your plans to take it from 1 to 10, and then hopefully 10 to 100?
Yeah. So first of all, we still have a lot more features that we want to push out and kind of just test and make sure we have that right feature set. Second of all, we're going to start investing some of that capital that we've earned. So obviously, SummarAIze is profitable, which is an awesome place to be in. So we have money to be able to spend on marketing or product or whatever we want to kind of invest on. And so that's what we're going to do to kind of take it to this next level, is really taking that capital that we've got, reinvesting it. Not all of it's going to work. There's going to be probably cases where we don't get a return on our investment back. But, if we believe in ourselves and we believe in the experience that we have, and, we can make smart decisions, then, at the end of the day, that capital should yield even more business for us. So that's kind of the plan to take it to the next level, is really just taking that money and reinvesting it to reach our next growth stage.
Yeah, and it perhaps it also very well is aligned with your own capabilities, right? Like you work as a early stage marketing person, consultant, or manager at companies, and perhaps this product would soon require that that push of early stage marketing.
Yeah, exactly. And yeah, like I said, you gotta have that confidence, and figuring out that stuff. If you can reinvest that capital, is the best way to kind of go with it. And I saw another quote from someone else somewhere everywhere, is like, you know, working on a startup is like having like 15 different jobs, and your job is to fire yourself from as many of those jobs as possible. So that's kind of what our goal is, as well as,
A good
to
one.
fire ourselves.
What do you think of bootstrapping versus raising funding in general, and what are your plans in place for SummarAIze specifically on that front?
Right now, we're going to continue to keep being bootstrapped. We're in a pretty good place. Like I said, we're profitable. If for some reason, other competitors start raising money or something like that, or we see something where we need to be able to raise money, then we'll reconsider. But for now, that's kind of our plan. And what I think about startup funding is, like, you should, it depends on what your goal is. Like, everyone's got different personal goals. If you want to build like $1 billion business, and that's something that you want to be able to check off that list, like, definitely going after funding is something important. Outside of that, like, you just got to like kind of consider what you want to do, and what your goals are for that. So that's what I would say about that.
And do you feel like there are a couple of spaces, maybe verticals, industries, where building a SaaS product and raising funding just doesn't make sense? Like, do you feel like there are some industries where some micro SaaS still might be able to generate some decent MRR, but it's not gonna you know build a massive kind of customer base and drive millions in revenue? So would you say there are SaaS products that should just never consider raising funding?
Definitely. Yeah. I think, yeah, like I said, it depends on your business goals or your personal goals as well. Like, if you want to be working on something that just like helps you be able to like have like a steady income and go travel and do all that stuff, like, you don't need to raise money to have a successful business. What it does is, at the end of the day, capital is a means to get other capital, or kind of change that up faster or slower. So that's really what the situation is. Um, and yeah, that's what it is. So, like, obviously, if SummarAIze had like another like 10x the capital in our bank, we'd be able to deploy that on a bunch of different product or different things, and be able to like hopefully get that money back even faster, and make those multiples. So it's just another like vehicle, basically, to be able to grow, is what I see it. So it should never just be like, oh, I just want to like, you have to have a plan on what you're planning on doing as well. So like I said, like, tie back into those personal goals, figure out what you want to be doing there. And then, if you do want to raise money, you need to decide what you need to have a plan of what you're planning on spending that money for. Like, you shouldn't just hold on to money, like, to get it. Like, that stuff needs to be reinvested, because it doesn't really do any help, just sitting in the bank.
Hmm. So I have two more questions for you, Jay. So on more on a personal level, so do you feel like working at a full-time job and then having a product to work on in after hours, for example? I'm pretty sure you might be putting some hours on even on the weekends. How has your life changed ever since like having this product to give hours on to, and like allocating time and energy consistently apart from having a full-time job?
Yeah, it's I mean it's hard. You have to make a lot of sacrifices and decisions. So yeah, I do spend a lot of time working. And yeah, I am spending more time working now than I was before. So that's what I would say on that front, is really what it is.
So this is just something that you have to deal with, and it should be expected at the start, would you say?
Yeah, it's definitely, I mean, you get out what you get into, and hopefully, if you're working on something, you've made that decision because you feel like the future payoff is going to be a lot higher because you invest those hours in. So that's kind of how I would think about it. But there's no way to grow without investing those hours and getting it started. Like there's no magical system that's going to take you from all of your ideas or things like that into a product or anything like that. You're going to actually have to put the hours in to get it done.
Cool. um, why do you think you're building it in public though? You could have just like built the same thing, raised all like have all those paying customers, grow this product. What is your purpose for building this in public and sharing all of the wins along the way?
So a couple of reasons. It's actually a lot easier for me to build in public and share, especially given the fact that the audience that I interact with on LinkedIn is like marketing kinds of people, like personas. So like putting it out there, talking about the product that I'm working on that is sold to that persona makes it a lot easier as
Hmm.
well. And it just tends to attract a lot more people into the idea of the product. So it doesn't necessarily have to be the person that I'm selling to, but maybe someone else sees it and then shares it to someone that could be a potential user or buyer or something like that. And so that's really big reason of like building public, and obviously just to also share my lessons and learnings as well. Like my goal is hopefully like by sharing some of this stuff that I can help someone and save someone from making some of the same mistakes that I've made, or help them reach whatever goal that they have a little bit faster.
And does it ever cross your mind like you're working on a product, and there are definitely juggernauts in any industry, right? um, do you think about those big competitors that could one day just allocate a team of 5 developers to build this new set of features in their product that would totally crush smaller SaaS companies?
Not really, because I think a big thing that's kind of undervalued is the unique POV for products. So, when you're building something, you can't just like build something to build something and then do it to just make, I mean, sometimes that works, where you can do that. But most of the times you need to also have like a clear vision of like what that future looks like and what kind of problem you're specifically solving, how you're solving that problem, what you're kind of doing. Everyone's going to take a different approach. Like if you give the same idea to 5 different people, they'll probably come up with 5 different ways on how to build it, and who to sell to and what the future roadmap looks like and all of that stuff. And so even if you copy and paste a whole thing, you can never really copy and paste the POV over there. So that's what I would say about that piece.
Sounds good. One last question. So if I were to ask you um, about 3 mistakes you would tell me not to do in my journey of building a SaaS product. If I just had an idea and I want to build it first, like I'm really excited and I want to go on this journey, what are some of the things that you would say based on your lessons that you've learned so far that I should just avoid and make sure that, I don't go in that route?
Yeah, the things you should avoid are spending too much time on the idea. Make sure that you're actually building a product. You should also avoid making sure that you're giving away your product too much for free. Like make sure you're monetizing. And then the other thing I would say is you want to avoid living in a bubble where like you're the only person that knows how to solve this problem. You're the only one that knows the feature set. Go talk to customers, ask them what features they need to solve this, and yeah, speak to your customers like once it's out.
Cool. Awesome. Well, thank you so much, Jay. It has been amazing talking to you. I think My excitement for this episode was just, extreme level, really. So, and I think I've gotten everything that I wanted to out of your brain so far. So yeah, really appreciate your time, and the fact that you've, you know come on the show. Yeah.
Yeah, of course. Happy to chat and glad we got a chance to have this conversation.